What are the key deadlines for self-assessment tax and when do you need to pay it? Well, check out this video as Louise and I will go through those very details. And in particular, we're talking about filing and payment of tax.
Okay.
Over to you.
Okay. Strap in, team, because there's a lot of dates here. So if you are looking at filing deadlines, if you want to file a paper tax return for your personal tax year and you want to post it to HMRC, you can still do that, but you must do it by the 31st of October following the end of the tax year. So our tax year ends on midnight, the 5th of April every year. So the 2021 tax year, as it's known, lovingly, finished on the 5th of April this year. You needed to file by paper no later than the 31st of October this year.
Which is gone.
Which is gone. So if you're now filing by paper, you can still file by paper, but you're likely to either get one of two things happen. You're either going to get it returned to you from HMRC or they're going to fine you for having filed late. And the minimum filing penalty for filing late is £100. If you're going to file electronically, so in other words, either load it directly into HMRC systems, and for certain types of tax returns, you can do so, or you're going to use some special proprietary software, then your filing deadline is the 31st of Jan after the end of the tax year. So for the tax year that's just ended on the 5th of April, 2021, you must file electronically no later than the 31st of January, 2022. However, if you want to secure the ability to pay your tax through future PAYE updates, so in other words, not pay a lump sum of tax if you've got some tax to pay over and above any you had taken from, say, salary, then you really need to have filed by the 31st of December 2021. Otherwise, HMRC won't take it out of your PAYE coding. So those are probably the first three key deadlines. Have I sent you over the edge yet?
So have we covered off? Sorry, I was just messing around with a bit of tech.
You were just messing.
I was messing around with tech. It's not working.
I should be telling him off later.
So the question is, have we covered off payments on account?
Oh, no.
The second payment account especially. So you've got the first payment account. Do tell us what that is.
We haven't even started talking about paying tax.
And obviously there's the there is the idea of tax. I did say at the beginning we need to talk about tax.
We need
payments.
to talk tax.
So
let's talk about payments now. So this is completely independent and separate from the filing deadlines, although some of the dates are the same, interesting enough. So if you have tax due, then the likelihood is you're going to be asked to pay it no later than the 31st of Jan following the end of the tax year. So back to my example, 2021 tax year, finished on the 5th of April this year. You must pay any tax due by the 31st of Jan 2022. However, on that same date, you may be one of the unfortunate ones, if I can call you that, to have been asked to do what's called payments on account. Payments on account are where HMRC require you to pay early towards a future tax bill. So in other words, tax year 21-22. And they'll ask you to make it in two payments. They'll ask you to pay half in January 2022. So by the 31st of Jan 2022, and they'll ask you to pay the remaining half by the 31st of July 2022. So you can find yourself in a really painful place at the end of January, where not only are you paying off the tax that was for this tax year that's just finished, you're paying early towards the tax return for the next tax year that you don't actually yet know what your tax is going to be. And guess what? RC forecast it for you, aren't they kind? So you're going to have to pay a completely made up number as well in January. Aren't you lucky?
And obviously you've got the second payments account.
Just talked about that one, 31st of July.
However, there are possibilities, is there not, of adjusting your payments account. Why might you be able to adjust your payment account?
It's a great comment you make. So adjust, not get rid of necessarily. So sometimes I can adjust payments on account for our clients, and I'm always looking at this for our clients because I don't want anybody paying over the odds, really, quite frankly, for tax. We pay enough as it is. And we can adjust payments on account if we have a robust forecast for the income for that client for the next tax year, so 21-22. And from that robust forecast, we build a robust tax return draft, and we use that tax instead of the payment on account number assuming, of course, it's less, instead of the payment on account that's been randomly, for want of a better phrase, generated by HMRC. They do obviously have a process they go through to work out what it is, but we can override that if we have more certainty our number is better and correct than HMRC's. Good news in all of this is that actually, if we forecast a bigger tax bill than that which the payment on account is presenting, we can stick with the payment on account and there's no issue for the client. So we always pick whichever is the lower, the payment on account forecast by HMRC or the one forecast by us.